Ever pondered how to sell your Tesla stock in a few years and retire? Many people think that by purchasing stock in the top electric vehicle business, Tesla, they will be able to invest in EVs, retire early, and still have a reliable source of income. To find out how, keep watching and listening. In 2020, the pandemic struck with great force. Numerous people experienced job loss, and many business owners were forced to shut down. Like many other big businesses at the time, Tesla also had a lot of difficulties. Presently, Tesla is beginning to recover, as seen by the company's stock price. You will learn how to sell your Tesla stock in 5 years today. Though it may be a difficult feat that not everyone can do, becoming a stock market billionaire is not unattainable. You increase your chances of creating long-term wealth by investing regularly, making wise decisions, and staying in the market as long as you can. One of the best strategies to increase your money over time is to invest in the stock market. One of the best methods to make money in the world is to invest in the stock market. The fact that there are numerous ways to benefit from the stock market is one of its main advantages, but there is a significant danger associated with the enormous potential gain. Recently, Darren Young provided analysis on his channel of how much Tesla stock would need to yield in retirement by 2030. According to him, 300 shares will likely be sufficient for him and many others to retire by 2030. Financial independence is the main reason why most of us begin investing, he said. He clarified that with just $5,000 a month, a basic retirement could be achievable, requiring about $2 million US dollars for a 30-year retirement. According to Young, there are various things to take into account that could have an impact on this plan. Inflation is one. He predicted that in 15 years, $5,000 will be equivalent in purchasing power to $10,000, assuming an annual inflation rate of 5%. He clarified that having many sources of income, such as carrying on with your Tesla stock investments and or doing occasional paid work, could help mitigate this. Even if every person is unique, $2 million should be sufficient to meet the needs of the majority of people. Naturally, keep in mind that different people have different demands and lifestyles, which will have an impact on the amount mentioned's rise or fall. Young determined the 2030 value of the Tesla stock price by utilizing the bull and bear scenarios. In the unlikely event that Tesla only sells 10 million cars, the average selling price would be $60,000, which is comparable to what it costs now. Elon Musk, the CEO of Tesla, anticipates that the company will sell 20 million cars by that time. According to him, there are a few variables that would offset Tesla's potential release of a few more cheap models priced around $30,000. The first is the eagerly anticipated Cybertruck price. The Cybertruck is expected to cost approximately $80,000, which is much more. Keep in mind that this is the worst-case situation. The current rate of inflation, which is 5% annually, is another element that affects the economy as a whole. Tesla and other businesses are predicted to have addressed most of the problems with autonomous driving by 2030. It should be mentioned that Tesla classifies its FSD revenue as car revenue. This suggests that by 2030, if Tesla's hardware is sold for $40,000, they might record $20,000 as FSD revenue, or an estimated $60,000 on average. When 10 million cars are sold for an average of $60,000 each, the automotive industry's revenue in a bear market is equal to $600 billion. This represents an additional $90 billion in revenue, assuming that Tesla maintains its current non-automotive revenue of $15 billion. Tesla is expected to generate $690 billion in sales in total. That translates to a total net income of $104 billion, assuming that the net income remains constant. The earnings per share is computed by dividing the net income by the entire number of stocks in the market, which is around 1 billion stocks. This results in an earnings per share of $104. Now, using Apple's P ratio of 30 for calculating purposes, the earnings per share of 104 is multiplied by a price-earnings ratio to determine the share price. In a worst-case scenario, Tesla's stock price would reach $3,120 by 2030, marking the company's maturity. The base case scenario involves a few minor alterations to the presumptions. First of all, Musk's target of 20 million cars by 2030 is still a touch off, even if annual auto sales rise to 15 million from 10 million. After then, net income rises from 1% to 20%. Tesla is increasing output in its plants in Austin and Berlin and currently earns $15 a day. When Tesla's fully operationalized gigafactories and increased software margins contribute more significantly to its revenue, the company may see an increase in net income. Assuming a base scenario where there are 15 million cars and a selling price of $60,000 per car, the total automotive revenue comes to $900 billion. An additional $135 billion in revenue are expected if the same 15% non-automotive revenue mix is used. Nevertheless, Tesla expects to make slightly more than $1 trillion in revenue overall, with a 20% net profit. A net income of US $207 billion is reported. Hence, dividing 207 billion by 1 billion shares to get earnings per share equals 207. Nevertheless, in a basic situation, the share price would be $6,210, which would be the earnings per share multiplied by PE, or 207 times by 30. And lastly, the scenario of the bull. Once more, a number of assumptions will differ from the bear and base scenarios. Here, Tesla will meet Musk's target by delivering 20 million cars annually. Additionally, Tesla plans to double its non-auto money revenue from 15 to 30%. Finally, Tesla's net income will rise to $25, the same amount as Apple's current net income. Assuming a bull market where Tesla sells 20 million cars at an average price of $60,000, the company would make $1.2 trillion in income from sales of automobiles. The extra $360 billion from a 30% non-automotive revenue would be significant. Tesla is expected to generate $1.5 trillion in revenue overall. 25 times net income is $390 billion in net income, which is comparable to Apple's current net income. $390 billion divided by 1 billion shares equals $390 billion in earnings per share. Additionally, if Tesla's share price of 290 is multiplied by 30 PE, that would equal 11,700 shares in a bull market. Keep in mind that these are conservative estimates. With a price-earnings ratio of 100 today, Tesla has more than 3 times the calculation's 30 PE. That being said, the share prices in all 3 scenarios would double if the P ratio increased from 30 to 60. However, even if the P ratio increased from 30 to 90, it would still be lower than the 100 P ratios of today. The share prices in each of the 3 cases will triple. Furthermore, Tesla's average selling price and margins still have space for growth. Now that all the calculations have been completed, let's determine the number of Tesla stocks required to reach the $2 million retirement target by 2030. Assuming a bear market when Tesla's stock price rises above 3,000, around 650 stocks are required. Approximately 300 equities are required in the most basic scenario, where the price of a Tesla stock exceeds $6,000. In the event of a bull market where Tesla's stock price rises above $12,000, about 150 stocks are required. As previously said, a wide range of requirements, desires, and lifestyles exist. As a result, various persons can need different retirement fund amounts. There are a number of considerations and actions to follow when choosing whether or not to invest in stocks. Making a plan comes first. It's critical to realize that investing directly in shares has some risk and reward, unlike mutual funds. It is a gradual and continuous process, therefore, before investing, make sure you prepare and figure out a capital amount. As you choose which stocks to buy, consider how much you can lose on each investment. The market needs to be understood next. It's important for novice investors to realize that stock market swings are unpredictable. Not even. Experienced investors can forecast the market with perfect accuracy. It's critical to comprehend how markets function. There is a possibility that the bid price will decrease the following day if the stock price rises one day. It is crucial to comprehend the variables influencing the stock market as a result. Be practical as well. Novice investors frequently anticipate faster returns. Setting realistic financial objectives is the first step in making well-informed and wise investment decisions. Additionally, be clear of programs that guarantee large returns in a short amount of time. Make sure you perform extensive research before making an investment. Lastly, get started easily. A lot of youthful investors overspend when planning and buying shares. Retaining financial stability requires simplicity. Make your analysis as straightforward as you can. The stock market is a turbulent place, as was already mentioned. Rather than becoming overwhelmed by the stock's performance, you ought to create and adhere to a broad approach. For more of this stuff, check out Tesla stock and our other films.